If you asked a regular Aussie on the street right now, "Are you a property investor?" they'd probably look at you like you've got a roo loose in the top paddock and say, "Tell them they're dreaming." Most folks in this sunburnt country don't see themselves as part of the property elite. In fact, the latest data shows that fewer than 2% of Australian households own 3 or more investment properties. But here's the real kicker. A fair few of you watching this right now are closer to that property elite than you reckon, and some of you might already be there without a tay knowing it. Today, I'm breaking down the exact numbers and the hidden mechanics of the Australian market. We're talking about how much property you actually need to own to be in the top 10%, top 5%, and the elusive top 1% of property holders. We're looking at the dinky-die figures from CoreLogic, the ABS, and Knight Frank. No fluff, no guesswork, just the hard data that shows exactly where you sit on the property ladder. Before we dive into the deep end, do me a massive favor. If you're serious about building wealth in this country, hit that subscribe button right now. We're building a community of savvy investors here, and you don't want to miss what's coming next. Let's start with the entry level, because that's what most people think of when they hear the words property investor. The median Aussie household owns one home with about $620 size in equity. That means half of all property-owning households sit below that line. There's absolutely nothing wrong with that. It's a solid anchor point and the foundation of the Australian dream. But here is the technical trap. Most people think equity is just money in the wall. It's not. In the eyes of the bank, equity is dormant energy. The average property holding across all owners gets pulled up to roughly $1. $1 million in equity. But here's what the mainstream media never tells you. That average is heavily dragged up by a tiny group of multi-property holders at the very top. The typical Aussie owns one home, lives in it, does a bit of a reno every decade, and has never gone back for seconds. They are asset-rich, but cash-poor, trapped by the fear of touching their nest egg. Now let's talk about the top 10%. To crack into the top 10% of Aussie property holders, you need at least $1.85 million in property equity. Now don't go thinking this is all Vaucluse mansions and Gold Coast penthouses. In reality, this usually looks like a paid-off family home in a capital city, plus one solid investment property in a growth corridor. If you and your partner bought into Sydney, Melbourne, or Brisbane before the 2018 surge and held through the madness of the last few years, you're probably already here. These are regular dual-income households that made 1 or 2 smart decisions and stayed the course. But here's the psychological barrier. Most people in this bracket would never describe themselves as loaded. They're still paying down a mortgage, raising the grommets, and dealing with land tax and insurance hikes. On paper, they're top 10%. In their daily life, they feel completely average because they're surrounded by people doing the exact same thing. If you're finding this breakdown helpful, drop a comment below with the word equity so I know you're following the math. It really helps the algorithm show this to more Aussies who need to hear it. Moving up to the top 5%, you're looking at around $3, $4 million in property equity. This is where the game starts to feel a bit different. At this level, you're likely holding a portfolio of 2 to 4 properties. This is where serviceability becomes the ultimate gatekeeper. Most people hit a wall here because the banks start getting twitchy about their debt-to-income ratios. To stay in the top 5%, you've had to learn the art of balancing high-growth assets with high-yield ones. You aren't just buying houses anymore. You're managing a balance sheet. You've likely mastered equity recycling, taking the growth from one property to fund the deposit for the next, without touching a cent of your own savings. At this stage, you're starting to see invitations to off-market opportunities. Buyers' agents actually return your calls on a Sunday. You've crossed an invisible line. You're now seen as a serious buyer, not just someone having a sticky beak at an open home. And then there's the top 1%. To be in Australia's top 1% of property holders, you need $7, $2 million or more in property equity. Knight Frank estimates roughly 42,000 Aussie households hold a portfolio above this threshold. This isn't just about high salaries. It's about sophisticated tax structures, family trusts, and a deep understanding of the velocity of money. The real 1%ers are those who understood how to use the bank's money to snowball their wealth while everyone else was scared of debt. They protected their assets during the downturns and pounced when everyone else was panicking. The top 1% threshold has jumped a massive 38% since 2019. The bar keeps rising. What put you in the top 1% 5 years ago barely puts you in the top 3% today. If you aren't growing, you're technically sliding down the ladder. Are you aiming for that 1%? Hit the like button if that's your goal. Let's see how many future tycoons we have watching today. Now here's where it gets really interesting. Equity is only half the picture. The other half, the part that actually defines property elite status, is access. This is where most Aussies get a massive shock. The truly elite property buyers in Australia don't spend their Saturday mornings scrolling through Domain or REA. They never see a public listing. They operate inside what insiders call the whisper market. We're talking about pocket listings and off-market sales that move billions of dollars in property each year without a single for sale sign ever hitting a lawn. Why does this market exist? Because at the top end, privacy is the ultimate currency. To be inside that whisper market, you typically need a verified portfolio and a rock-solid relationship with specialist buyers' agents. Australia's most expensive home sales are almost always handled this way. The top 50 sales of the last 5 years, nearly all of them were hush-hush deals done over a private phone call. But here's the part that most people miss completely. Globally speaking, if you hold property in Australia, you are already among the wealthiest people on earth. Our median household property wealth ranks second in the world, trailing only Switzerland. We sit comfortably ahead of the UK, the US, Canada, and even Singapore. If you own a modest home in any Aussie capital city, you are wealthier in property terms than 85% of the planet. So why do so many Aussie property owners still feel like they're stuck in the mud? It's because property wealth is relative. We compare ourselves to the people we see at the local cafe, not to the billions of people we don't. The real secret of the property elite isn't just a number on a spreadsheet. It's about moving from being a homeowner to being a portfolio architect. Knowing your equity is step one. Knowing how to deploy that equity inside the whisper market, using the bank's leverage without strangling your cash flow, is what separates the top 1% from everyone else. If this gave you a clearer picture of where you stand, make sure you've subscribed and shared this with a mate who needs a reality check on their wealth. Cheers for watching, keep your eye on the prize, and I'll see you in the next